Hello guys, welcome to another video. If you are new to this video, my name is Aziz. In this video, I'm going to share with you a simple trading strategy that works on all commodity. And if you can stay to the end of this video, I'm going to share with you how this strategy is able to help me to catch over 500 pips on gold on this last market close. So for many of you guys that are new to trading, I want to explain this part to you in order to share with you guys why we trade commodities compared to the currency pairs. So the difference between the commodities and the currency pair is that currency pairs are usually focused on trading the currency, which is US dollar or maybe GBP USD or trading euro and things like that. And compared to the commodities, we usually trade gold, oil, we trade silver and other commodities. So and also the key difference is that they have their daily range of trading. This is more complicated, but you don't have to worry about this. And also they have more trackable trend. And another thing about them is that they have less liquid, which means that currency can be easily printed, which provide more liquid. And compared to the commodities, their resources is very hard to get gold. And as you know, it's also hard to get silver and other commodities. So this is the key difference about the commodity and currency. And another thing I would like to share with you guys also is the advantage of trading commodity. The first thing is that commodity is actually a form of way to protect us from inflation. What I mean by this is that when inflation is very high, usually what people or traders they do is that they bring their currency, they bring it to buy commodities like gold or silver in order to be able to hedge against inflation. Another thing is the transparency because the currency can be manipulated in some sense, can be printed by some new government. So in times of commodity trading, you can expect that you are going to have more transparency because if they don't mind, it cannot be put into the liquid of the commodities that you're trading. So you also can protect yourself from potential dangers like geopolitical events. Like if there's an event in your country going not well, you also can be able to go and buy gold in order to be able to save yourself in case you want to travel to another country in order to exchange the gold for that currency to survive. Then in the case like let's say a war is breaking out in Ukraine or wherever, if let's say they have a gold, then the individual can be able to just take the gold and travel to another country and change the gold to that local currency in order to be able to basically start a new journey and whatever. So it's not a good thing to talk about, but it's just something that you should have in an idea that trading commodity or having commodity as a form of hedge against currency is a good thing because it's able to help you in times of war or events that you might not be expecting. Aside from that, let's go get into the video without wasting your time. So the first and foremost thing in terms of the strategy, first thing you need to realize is that trading commodities, especially for gold, you have to first mark out the key zone. So before you can mark out the key zone, you first need to understand what is support and resistance. And I believe most of you guys that have been engaging in trading, you might understand that. But if you don't, let me just go in brief form for you what is support and resistance. In short form, support is a form of a floor, while the resistance is a form of the ceiling. So usually support is a zone whereby the market usually find a hard time to break through, while resistance also is the other way around, is a zone where the market is finding a hard time to break above. In trading of this strategy that I want to share with you that is very simple to trade commodities, you first have to mark out your key zone. So first thing is that I mark out my key zone. Also you see that there's a support here. You find another support zone. And sometimes the support zone might not be straightforward like this. Let's say I want to mark a new one. Usually you say you want to mark like this. But because the market move in a interesting way that they move by looking for liquidity at different zones, so you also have to mark the zones whereby you realize the market has been rejecting at a very consistent point. So let's say this mid level here for me, I'm going to mark another zone like this, which is a mid-level resistance, which means as you can see here, the market has rejected at this zone. You try to break, come back also to this zone, you reject again. Same thing here, same thing here, same thing here, and we can also see another one happen here. So this shows that there's liquidity at this zone and there's also a supply zone at this zone. So to get into the strategy, the first thing you need to go and look for is your moving average indicator that you need to add. So you look for this simple moving average, you can add this to your chart. So once you add it, it's going to show there. So once you have done that, then you will go to the settings. Make sure that you set the settings to the length to 50. You can also do the same thing on your phone. So once you set it to 50, it's going to give us this moving average on 50 length. So once you have that, we are able to tell what is the trend and when the trend is going to reverse or change on us. So first thing first, you need to understand that this moving average is just a way to let us know what is the trend we should be looking for. And sometimes you can see that it can be consolidating a lot. This doesn't mean that we definitely need to be taking trades at that zone. We just want to know which direction we are able to look towards to. Are we going to be looking for a buy, or in this event we should be looking for a sell? So once we have marked our key zone, now the next thing is try to look for the zone or the point of entry where we want to enter our trade, where we want to be able to set our trade to maximize our profit. Because why this is that this market, especially for commodity, especially for gold, is very, very volatile compared to currency pair. So when we trade gold, we want to make sure that we are entering at a point that give us the best price. Because if we enter at any point, no matter the point you enter, if you are not careful, you can be easily taken out and you can be easily wrong in this market. So we want to make sure we are entering at a point that is very good. On average level, we are good enough not to enter at a peak point. Sure, you can find a peak point, but realistically, we try to find a point that is reasonable for the market we are trading, and in this event is good. So now moving on, once we have marked our key zone and we have adding our moving average, so what we start to look for is a good point of entry. So for this market where I'm able to trade it, to catch this last market 500 bits, first let me go back to the play and show you guys how this market plays out before I'm able to take the last trade. So first and foremost, we can see that the market has been moving on a very strong uptrend. This is on the 1 hour time frame, and we can see that it has been building some zone, and it also has been breaking it and creating a new height. So once we reach to this zone, we can see that the market momentum start to slow down, and we can see that the market came to this our moving 50 moving average. It tried to break down, but eventually it break up. So we can see that there's another key zone here to basically know that there's some liquid there, there's some reaction at this point, and the traders are actually basically reacting at this point, and we can look to buy there also. So as you can see, when the market open, it should hope for a strong buy, and we can also tell that this buy supposed to continue after this little correction, but it didn't. And if we move on, we can see that the market shoot downwards. So after it shoot downwards, our expectation was that the market is going to break through this support zone here, but it didn't. And we now realize that it seems like market is now reversing to the other side, which is our first confluence that we need to look for when using this strategy. We first need to make sure that the momentum in the market is changing from one direction to another direction. And this event where we see a big spike shooting down, it shows that the market is now entertaining the sellers more than the buyers. I'm going to say this again. We can see that the market is now entertaining the sellers more than the buyers compared to what we have been seeing before. Yeah, market has been entertaining the buyers. The buyers have been winning, taking out the sellers, and the sellers try to bring back their trend in, yeah, but it didn't succeed because there's still a lot of buyers. But yeah, we can see now they are strongly taking over and the buyers are also weakening. So this gives us a few confluence to start to look towards sell rather than buy. So when the market shoot down, we can see that the buyers also they shoot it back up. which is a good sign that the market now is moving towards our confluence. So another thing we are going to look for is now, is truly going to play out to our direction, or what kind of amount of pips we should be looking, or what kind of amount of movement we should be looking for. Is this going to be happening at a short range, or is going to be happening for a long trend throughout a week or a month? So how do we know that? First, what we have to do is now try to see if the market is going to pull back to a very strong zone, which is one of our key zones. So as the market move on, you can see now market play nicely. It tried to push to this our key zone here. So this is where now we start to see that, okay, is it going to break through this 50 moving average and basically come back to this all-time high? But we see at this zone there was a very strong sell. So once we see that, we start to know that, okay, now the market is fully heavily moving to the other side. And regardless from all of that, the market actually is moving from up, back to down. You can see that we are creating a form of umbrella. So I don't know if you guys can see that, which is very important. We can see that the market momentum is changing from very strong buy now to strong stare. I mean, even before this happened, we can see that the momentum is not creating a new higher high and higher low anymore. We are creating a new lower low and new lower high. So once I see this, and now I see that now the momentum, especially the moving average momentum now, is now above the market price. So I basically got into the trade, like get into the trade around here, and I set my stop loss to about 90 pips to be safe, because I'm basically looking for a big move for this trade. So I set in 90 pips, so like this, and then I set my take profit here for 500 pips. The market plays out easily. But one thing you need to understand, that this takes time. It's not going to be something that easily just moves directly to your direction once you basically consider all these things in addition. So as you can see, the market basically reached there, then moved to our direction. And I get out here, and I'm going to share with you here. You can see how the trade play out, how I use this trade to pass the platform with this strategy. If you basically follow all the things I share with you, you are going to see that you are going to be able to use this strategy every time and basically be winning. So the strategy is very simple. First, you mark your key zone, which are these. You can go to the bigger time frame like the 1 hour or 4 hours. You mark your key zones to know where the point whereby it's safe to enter. Second, you put in your moving average, 50 moving average, to be able to know where is going to be the trend that has the most power. Is it the buyers having the most power, or is this the seller is going to be having the most power in the next hour, in the next week? You want to know that so that you can know what direction you want to be going with. So once we can confirm that from the analysis on the chart, then we can start looking for a good point of entry. Once we see that, okay, market is now moving towards that direction, then we can join in into the trend. Guys, if you're really finding any value in this video so far, please try to subscribe so we can reach 2,000 subscribers as soon as possible. So moving on, once you have done that, the last part is now knowing where you should get out. Getting out is first by knowing what is your target. Like for me, I was able to get out from this trade because my target was down here to pass the platform I want to pass for the first challenge. And the reason why I get out here is because it's enough for me to get out. But initially, if I'm trading this market, if I'm trading this for my own personal account, I will not get out here because I can see that the market is really moving in a very strong, bullish, bearish way. So once I see this, initially I'm going to try to wait and see if the market is going to reach this zone. So taking a trade, you first need to know where is your target, and the last part is knowing where is going to be your exit point. So that helps you to know that this trade, you are eventually going to realize profit and when the trade is really moving on to your direction or you reach your target, you don't get greedy. You can know when to basically get out. So that is very key when you're trading. First, you know your entry zone, and you also predetermine your exit zone to be able to help you to use this strategy in a very effective way. That is it, I believe, for this strategy. If you have any comment or you have anything you want me to talk about, make sure you put in the description below so that I can answer you in order to be able to help you use this strategy in a very effective and be able to use it to profit for your platform or whatever account is there you are trading your personal account as well. In conclusion, make sure when you use the strategy, you are patient with the market. You try to give the market time to play out your direction because you are waiting for a big move in the market. And once you have a predetermined zone whereby you want to exit, when the market reach your zone, you get out and try to look for a new setup. Make sure you follow everything in the strategy. And if you have any question or anything you don't understand while using the strategy, just put a comment in this description below. And if you find value in this video, make sure you like this video and you subscribe to my channel for more videos like this so I can help you with your trading strategy and your trading journey. So thank you for watching this video, and if you're new to trading, make sure that you watch my beginner videos so that you can learn the 2025 roadmap on how you can start your trading journey to profit. So see you guys in the next video.